Welcome back to the Trend Trader channel. In today's video, we're going to be talking about Sibanye-Stillwater. We saw that Sibanye released a statement to say that they have signed a 3-year wage agreement with the trade unions within the mining sector. Particularly the unions that they signed the agreement with, it's the Association of Mine Workers and Construction, and also the National Union of Mine Workers. So this means that Sibanye-Stillwater employees will be receiving an average of 6.3% salary increase over a period of 3 years. And then how that is going to be done, it is highlighted in there. So this is good news for both the employees and the shareholders of Sibanye-Stillwater, because it means that the work is going to resume. We saw that they had implemented a no work, no pay policy in the past, and the strike it dragged several weeks. So it's good to see that the both stakeholders, the employer and the employees also, and the trade unions, they have reached an agreement. So this is a positive news. But what we want to talk about is the Sibanye-Stillwater share performance, how this share has been performing in the past. Remember, we had a video where we were talking about how we were expecting Sibanye-Stillwater to perform. But before we can talk about Sibanye-Stillwater, let us first look at the platinum futures. Remember that Sibanye-Stillwater, it's a PGM producer, but in addition to platinum, the company is also involved in some gold production there. So from this chart, it is clear that platinum has been trading lower for quite some time, with this potential support level somewhere around $900 US per ounce of platinum. So we already see here that there's a bit of a downward momentum. So anything is possible, especially if the price of platinum it drops below $900 US per ounce. Things could get really messy for platinum producers. So that is something that you have to keep in mind. But obviously, the other alternative is that the share price it continue to trade higher above 900 US per ounce there, which is going to be positive for all the platinum miners. So that is something that you just have to keep in mind whenever you are trading this. Okay, then when we look locally, we can look at the JSE Top 40, so that we can have an idea of what is happening within the JSE. We've been saying that for a while now, that the JSE it was kind of weak. We saw that whenever we try to buy some companies, they've been moving down. So previously, the JSE broke above this level here before topping up somewhere around 72,000 points there. Since then, the JSE has been on a downtrend. A lot of companies are affected. If you just look at your portfolio, look at the number of red positions that you are there. So that should tell you something, that the market is in a bearish territory, especially if you keep on trying to buy the dip, and the dip it keeps on dipping. We saw that the top 40, it came back to about 60,000 point. It found support here, then it rallied, but that rally was short-lived there. As you can see that the JSE Top 40, it quickly reversed. So now the level of interest that we're looking at the JSE Top 40 is this level here, around 60,000 point. So if the JSE breaks below that 60,000 point, then once again things are gonna get a bit messy. Obviously, the other alternative is that it continue to trade high above this, but for it to go high, it means that a lot of the companies, especially the top 40 companies within the JSE, they need to trade higher, and you can already see at the moment that those companies are struggling to trade high. So that is something that you have to keep in mind whenever you are trading the JSE. You need to keep in mind that the JSE Top 40, it's a bit weak. And then also when we look at Satrix Resources, which is the index of the resources companies in South Africa, which includes Sibanye among others, we can already tell that Satrix RESI is also weak here. We saw that previously it broke above this level, and then it rallied there, going to as close as 100 Rand per ETF before it coming back. At the moment, it is trading at 71 Rand per ETF, and then again it is at this level here. Then once it trades below this level, again, like everything else, things are gonna get a bit messy. So now with all these pieces of information, then you shouldn't have like higher expectations with Sibanye-Stillwater. Sibanye, it's one of the companies. It can also just perform as poorly as everything else that is falling. In the previous video, we mentioned that Sibanye has been bouncing up and down between this support and resistance, and then we mentioned that if Sibanye starts to trade below this support level there, it will mean that it would have broken below this support level, and then the next potential support level is somewhere around 35 rand per share, or just above 32 rand per share. If that levels fails to hold, we said that the worst case scenario is going to be somewhere around 16 rand, 17 rand per share. So that is something that you should keep in mind, right? We're not saying that Sibanye-Stillwater is going to fall to about 35 rand. We are simply saying that if you bought Sibanye at 50 rand and then it went to 43 rand, you shouldn't be surprised if it goes to somewhere around 32 rand per share. And for us, if you thought that it was cheaper at 50 rand, then it became cheaper at 43 rand, then you probably want to wait and to see if it does indeed fall to 32 rand per share, because if you have money to buy it at 43 rand and it's falling, there's no need for you to buy it at 43 rand per share. You can just practice a bit of patience, so that if it falls to somewhere around 32 rand per share, then you can buy more of those shares. We understand that some people, they prefer to accumulate shares, but whenever the share price is falling, number one, nobody knows how low the share price can fall. So you need to give that share price to fall on its own. You don't need to have a position. Just a quick disclaimer, we don't have a position on Sibanye-Stillwater. The reason is simple: the share price is declining, so we are not interested in buying shares in companies that have a share price that is declining. We are also aware that Sibanye-Stillwater, it pays dividends, but we don't buy stocks just for dividends. We buy stocks primarily for capital appreciation. If the capital appreciation is not there, then there's no need for us to buy that particular share, even if that company continue to pay dividend, because depending on how low the share price can fall, let's say for instance the share price, it falls by minus 30%, but the dividend yield of that particular company is 5%, then it means that despite receiving those dividends, we will have lost some money due to the stock market decline. And then once again, if you think that but the company, it still exists, it still has solid fundamentals, once we're in a bearish territory, then everything, it doesn't matter how good the fundamentals of the company are. If the share price is falling, then we should continue to expect that the share price of that particular stock, it can fall until the stock has proven itself that it has stopped falling, and then it is starting to rise again. Then that is the time to buy those shares. So for now, we are going to avoid Sibanye, because we are anticipating that the share price can drop to somewhere around 32. We are not predicting that it will drop there. We are simply saying that the share price of Sibanye is now trading below this previous support level that we noted in the past, and for that reason we don't see the need to continue to buy those shares. Once again, if you think that it is cheaper at 43 rand per share, imagine if it goes to 32 rand per share, it is going to be much more cheaper. And the worst case scenario, if it goes to somewhere around 16 rand per share, then it is going to be cheap again. So for us, there is no need to buy Sibanye-Stillwater shares at 43 rand if they can become cheaper at 32, and also if there's an opportunity for them to become cheaper at 17 rand per share. We're just gonna wait until we see what happens with the Sibanye-Stillwater share price. Another share price that is struggling, which is in the platinum sector, is Impala Platinum and Anglo-American Platinum. We saw that those companies, the share price have been falling as well. But this one, if you look at it, we can see that the share price is trading to something that looks like a support level here. The reason why we're saying it's a support level, it was previously it acted as a resistance level until the share price of Impala broke above this level. So we saw that it went to as far as 300 Rand per share before coming back and finding support at that previous resistance level. Once again, the share price of Impala Platinum is back at this level here. So the best case scenario is for Impala to find support and then continue to trade higher. Just keep in mind what is happening on the price of platinum itself, and also the price of the JSE Top 40, and then just pay attention to the share price of Impala itself, among other things. Then depending on how this share price perform, the worst case scenario is that if the share price trade below this 160 level, then we might find support somewhere just near this level there. Once again, if this level fails to hold, then we can expect the share price to continue to dump down there. We don't have Impala Platinum in our portfolio as well, so if this scenario plays out, we won't be losing any cash there because we don't have a position. Basically, we are not encouraging anyone to buy these shares at this moment until the downtrend has stopped. And then finally, another platinum company that we mentioned, that we say that it is equally struggling, it's Anglo-American Platinum. So basically at this moment we are kind of bearish on the platinum sector. So once again, this share price is at this support level, which was previously a resistance level. We can see that for several times the share price tried to break above this level, and then it succeeded on this attempt just before the end of 2020, and the share price, it pulled back similar to Impala Platinum, and then it found a support here around this level before then it ran up a bit there, which I think it was a bit of an exhaustion, because you can see the size of this candle. Even though the breakout was promising, we got sucked in because this was the resistance level. So here we brought that breakout, which quickly failed the following week, so we had to cut our loss and exit that position. Once again, the share price is back around that 145 Rand per share region, so we want to see if this is going to hold. Then if it holds, then we can expect the share price to go up. But if it fails to hold, then the worst thing that will happen is that the share price is going to trade below 140 Rand per share. Once again, we see that here there's that potential support level, but if that potential support level it fails, then you can see here these candles here, they can act like the support level, and as you can see, that level is just below 60 Rand per share, and this level is about somewhere around 120 Rand per share. So from 144 to 120, that is going to be a significant decline, but from 120 to potentially 50 Rand per share, that is going to be another potential decline. But remember, we're not predicting that the share price is going to fall. We are just keeping in mind that if the share price fails to stay above this level here, then things can get worse. So depending on where buyers are coming from and how the markets are performing, remember, even the S&P 500 and NASDAQ are also performing poorly. So it's not just a South African issue. Some people are speaking of a US recession. So far it has been a US recession. Hopefully it doesn't become a global recession, but the purpose of this video is to show you that we can just use a technical analysis in order to avoid a carnage into our stock portfolio. But then once again, other people have a different view. Whenever they see a share price falling, they see an opportunity to buy more shares. In our case, when we see the share price falling, we see an opportunity to avoid those companies in order to save our capital, because every bearish market, it does eventually come to an end, and we want to ensure that we still have capital in order to take advantage of the opportunities when the bullish market it starts once again. So that's it for today. That is what I wanted to share with you, that Sibanye has signed that wage agreement with the trade unions, and also to show you that the platinum sector at this moment, it looks weak. We don't know how long it's going to be weak, and we don't have positions in those platinum miners. So we're just sitting on the sidelines to see how the share prices perform. Once the decline has stopped, then we will consider buying those platinum companies. If you find value in this video, please consider subscribing if you haven't subscribed, and also smash that like button, and feel free to share this video with as many people as you can. That's it. We will see you in the next video.